All right. Hello, everyone. Thank you for tuning in. Happy birthday to Billie Holiday, one of my favorite musicians. Coming to you from Connecticut here, where I myself am pretty psyched about March Madness because UConn is dominating. So don't hate me just because I was born here. But let's just go into the markets here. So there's some really interesting stuff going on, and I think we're making a top here in equities at least. I mean, we'll go through some of the other things. Actually, let me just start with a couple other things, which is why we're making the top in equities. First thing I want to show you all is oil. Okay. Oil is skyrocketing. It is up 25% in 3 months. Um, Now, I think it's going to keep moving higher. I think if it gets up to about 89, we're going to find some resistance. And why is that? Well, notice how 89 was resistance back in October. There tends to be resistance at former peaks, and there's a reason for it. And this is what being a trader is: understanding the way markets talk to you. All right. It's not about guessing, it's not about trying to be perfect. Guess what? There tends to be resistance at former peaks. Why? Actually, you know what? You can even see this down here. Resistance. Well, there are people who bought at the peak who regret doing so when the price goes lower. And they say, hey, if it ever gets back up to my price that I bought at and I get out of break even, I'm going to. So whether it's a stock, whether it's oil, crypto, regardless, when we look at a chart, we're looking at human psychology. So this oil, I think, is going to move ahead. So it's about 87 now. A couple more dollars here means there's a couple more dollars up in some of the energy ETFs that we look at. So make sure you check back in. ExxonMobil will probably move up a little bit. All right. But this is going to be net. This will be good for the energy part of the market. But for most of the market, it'll be a negative. Now, let me just jump over here and take a quick look at natural gas. We like to look at that too. Yeah, natural gas is sitting on a pretty important level here. It's been kind of hard to trade, though. I don't know. I've been out of natural gas. And I don't trade futures. I just actually trade the ETFs. Boil, BOIL, and KOLD. One is a leveraged ETF that goes bullish. The other is a leveraged ETF that's bearish. But I just, a year or two ago, natural gas was really easy to trade. It just, I don't know. I'm getting confusing signals. So this is a good lesson. If whatever you trade, if it's not working, don't force it. Just sit out on the sidelines. It's okay to be on the sidelines. If one of the biggest problems that my students have when they first come to me and they say, like, gee, Mark, why did I lose so much money? Because guess what? If they were making money, they probably wouldn't come to me. So some of them feel as though, and you might feel the same thing, they always need to be in the markets, and you don't always need to. Some of the greatest trading quotes in history from guys like Jesse Livermore or Paul Tudor Jones, who are each legends, but they lived 100 years apart from each other, say the same thing. They make their most money by being on the sidelines. They don't need to always be engaged. And when a great opportunity comes along, they jump in. If 2 weeks go by, there's no great opportunities, hey, it's cool. Just chill. All right. So let's go to equities here. So SPY is first thing we're going to look at. Now, we had a pretty big move lower on Thursday. I mean, this shows us there are aggressive sellers out there. I would not be long this market. Maybe we get a little bit of a rebound. I think we're finally starting to see a correction that has been pretty much overdue. A lot of this is going to come from interest rates. So one of the things I look at for a benchmark is this interest rate ETF here. Well, it's actually a bond ETF. Okay. So this is the old descending triangle pattern. And what it shows is aggressive sellers and buyers who are chill. I don't care what market you're in. All right. Commodities, stocks, shoes, honey. I mean, any market, if these sellers are aggressive, I'm saying that because I'm making bear tonight and I'm putting honey in it. But anyway, maybe I should start a website for that. But notice how as time is going by here since the end of January, we've had this support around 92. It shows the buyers are like, okay, they're like, all right, well, whatever, I'll hang out at 92. But as time is going by, these peaks are forming at lower prices. Notice how the valleys are forming at the same prices. The peaks are forming at lower prices. This shows us that as time is going by, sellers are getting more aggressive. Buyers are hanging out. You have aggressive sellers, complacent buyers. It sets the stage for a move lower. All right, I'm just going to just hit some of these sectors real quick here. Here's the tech sector, right back to this lower support range. If you want to watch one thing in the market, I would say watch Apple. I think as Apple goes, the whole market goes. Once again, we're down to this support here. Now, why is there support at this level? Well, it was support before. People sell, the market goes higher. A lot of people who sold are like, I made a mistake. If I can buy my shares back at the same price I sold at, I will. So remorseful sellers placing buy orders, the level that was support, can 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 make support stay intact for an extended period of time. But if the support breaks, meaning the price trades below it and stays there, well, it tells us that the traders who created the support with their buy orders are out of the way. So now if new sellers come into the market, they're going to have a hard time finding buyers. They're going to have to push the price lower. So I think we're in the middle of a topping pattern here. I think the market's going to go lower. Not surprising. Markets don't go up forever. It's just natural reaction. But there's going to be money to be made on the downside. So make sure you check back in because we talk about inverse ETFs. If you're not an options trader, that's fine. Inverse ETFs, a lot of our students are very sophisticated and use complicated strategies, but a lot of our students are also newbies, and that's cool. My only prerequisite for this class is that you want to learn and not to be told what to do. So that's it, everybody. Make sure you check back in. I think we're going to see some pretty tradable action in the market this week, and I hope to see you soon.